Look who's here, Bob Dole. We call him the $1 trillion guy. He's with Nuveen Asset Management. All right, Bob, welcome back to the program. Good to see you again.
Same, Stuart. Happy Friday.
Merrill Lynch fund managers. Merrill Lynch did a survey. 83% of fund managers say stocks right now are overvalued. What says Bob Dole?
Yeah, I don't think so. Fully valued, maybe. I guess what I'd say is we need continued decent fundamentals for stocks to go higher, but I don't see a whole lot of risk. Big risk to the downside, Stuart, typically comes when we have an earnings problem, and we sure don't have that at the moment. So I think stocks are just fine, thank you.
So you wouldn't be a seller today in advance of the French election on Sunday and maybe repercussions on Monday morning?
No, I wouldn't. I'd hold my nose right on through it. We've had these episodes before. I think of the Brexit vote, and yeah, it wasn't fun, the Italian constitutional referendum, but pretty quickly the market said, oh, let's move on. The economy's getting better, earnings are going up, let's go higher.
Okay, I want to bring this to your attention. Maria on the Fox Business Network earlier today sat down with BlackRock's Larry Fink. But I believe he manages $5 trillion. Here's what he had to say about the markets. Roll tape.
In the short run, let's see what earnings season brings to us. If earnings continue to be like what GE announced and what Blackstone announced and other firms announced and BlackRock, maybe the stock market is fairly priced. But to have the next leg up, we have to have some of the performance out of Washington.
Right. Okay, the next leg up, he says, Bob, is you've got to have that performance out of Washington, which means healthcare and tax cuts. You agree with that?
Well, I don't know that we need to get both. We just need to see we're going to get something. Over the last couple of months, I think we've gone from the probability of health care and the probability of tax reform is, some bigger number than it is today. And we can't keep moving in that direction for the health of the market. I mean, the good news is, despite that walk back of those probabilities, stocks have hung in there just fine, and it comes back to earnings. So I would put earnings first and second, and Washington third, if you will, in terms of what's going to move this market.
Now, most of the earnings report, the big companies really start next week. But of the earnings reports so far that we've seen, I'm told they're pretty good. What say you?
Yes, they are. They're better than expected. It hasn't been uniform and never is. But Stuart, we have the first chance for a double-digit earnings quarter in quite a few years. And for the bears out there, the revenue growth is going to be reasonably good. We're guessing maybe as much as 7% revenue growth and 10 to 12 in earnings per share. That's pretty good news.
It sure is. That's a change. Bob Dole, thanks for joining us, as always. Have a good weekend, sir.
Thank you, Stuart.